I hope you're doing well. In today's video, we'll continue with assessing the markets on the daily time frame in order to make a plan for the week ahead. So, in continuation with the series that we have been ongoing for quite some time, we had assessed the previous M pattern and the target at 25,300 Nifty, at which point we were planning to buy. We were also looking forward to a consolidation of sorts so that we could allocate serious amount of money, and we had obviously factored the possibility of a consolidation and a breakout because it is a pullback in a range break or a straight upward move. Now, of the two scenarios, the more bullish scenario actually took event, and Nifty has straight ahead gone up, and it did so with a breakaway gap in the middle. Unfortunately, the breakaway gap was not immediately followed up by a subsequent measuring gap, but rather Nifty chose to get into a range of sorts and then break away again, with the exception being on a Friday where there is a gap down red closing. Now, the occurrence of this candlestick on the previous double top high, we have to obviously look into it slightly deeply. So I will just zoom into the screen a little bit more, and I will remove this line that I was marking earlier for reference. Now, after a consolidation, a clear gap up above the high followed by a immediate gap down, the question is this an evening star? Intuitively, it does look like an evening star based on very loose theory, but I don't feel like it is one. I do not know why I'm saying that. So I just tried to Google some images of evening star pattern, and typically the evening star patterns need to have a very large bullish candle, a gap up, and a spinning top candle at best. So there is either a spinning top candle or a doji, in which case a standard and an evening doji star is there, and of course an abandoned baby if the gaps are simply not filled between these candles. Now, this is not a spinning top. This is a big bullish candle, but this is definitely not a spinning top. It is a three pattern candle in which there is a gap up followed by a gap down, but it's very difficult to call this an evening star as per strict theories, and also intuitively I feel like this is not one. But regardless, we have to be prepared, and an evening star after a three pattern candle still needs a candle of confirmation, which will be a clear close below this low, sending the market back into the same 26,100 to 25,700 range, and that is what we will have to see. It is obvious that the move from 24,300 all the way to 26,000, approximately 200 on the index, happened quite linearly. And I mean, depending on the account size, it gives us less time to fill the account. So the question obviously is that what do we do in the event there is an evening star? So the way I see it is that on one hand we have a market which we have been analyzing from quite some time, which we saw was first behaving almost like a trend line. Eventually it gave a range break, and once it gave a range break, we can use a fib retracement to see how much of it retraced, and we will see that the market retraced up to 50%, indicating a bullish week. From there it has definitely formed a double top, and it looks like it is forming an evening star, but it's still unconfirmed, and I still have my doubts. So prima facie it seems that there are too many upside reasons for the market compared to the downside, because on one hand we have all this higher top higher bottom kind of formation, on the other hand we have this unconfirmed poor replica of an evening star. So I wouldn't be too enthusiastic about going short on the market or booking profits. The only disadvantage, of course, is the timing of this fall. The timing of this fall, as we are fully aware, that the exchange increases the margin significantly just before the expiry, and the expiry is 2 days from now. So this fall, the sharp fall, basically forces an early rollover of sorts. And in that case, the gains that are required to be booked in November then get shifted on to December. So it's not fun. So in general, I think the view going forward would continue to be long. Obviously, this low of 25,300 is extremely strong. This gap support of 25,700 has become extremely strong. These are logical places to write a put option if in case the market does move in lower. If the market moves in lower, then the general expectation will be that it will take support and continue its rally up. That would be the general expectation based on what we are seeing on the daily charts. There is no reason, I think, there is not enough reason to initiate shorts. I think perhaps rather than saying that it will go up, there is not enough reason to initiate shorts. However, despite this clear move, I think most of our portfolios would not have looked very nice. And the reason for that is the other broader index. I'll just take the Nifty small cap. And contrary to how Nifty is creating swing highs, this one is creating swing lows. And in general, if you look at the small cap index, even on the monthly, and we just take this ray here and connect this. So this one is moving in the fashion of an inverted head and shoulder. The inverted head and shoulder pattern is obviously a bullish pattern, but it is very, very difficult and tiring to trade a pattern while it is getting formed. Our best, I mean, it is my opinion that the best bet is to actually get in once the pattern is formed, because the trade action before that is very erratic and extremely tough. And something to that nature is actually ongoing in the small cap index, and it is currently at a range low while the market is at a range high. And because the small cap index has 250 stocks, for example, this is the small cap 250, and the Nifty has only 50 stocks. Of course, they have a far larger market cap, but these have the greater breadth of the market. So despite market actually creating not exactly a life high but threatening to create a life high, the wider breadth of the market is still under pressure. And therefore Nifty is amongst the few stocks alongside, say, maybe Reliance or Bharti Airtel or something, which are doing well. But by and large, the stocks are not doing well, and this can be essentially seen in the most broad market. That's the small cap index. How to trade this particular market? It is without a doubt that on the daily time frame, this market is currently ranging. It is further without doubt that this is most likely a double bottom, and only a question is it a case of a very, very weak trend line, like barely sloping trend line? If that is the case, then the small cap index must try and take confirmation here. Obviously, the trend line is sort of established because of 3 test points, so it's very difficult to imagine that this index is breaking this at, say, 16,700 levels and going all the way to 13,000. Anything is possible in the world. One could argue that this is actually a head and shoulder pattern that is happening, but I don't. But it's very difficult to see that. It's very difficult to make an assumption that the neckline is going to break so easily, and that also such a easy to defend neckline. I mean, it's not a steep neckline; it's a very easy to defend neckline. So in general, I feel that it should show some sort of confirmations, which means that if the small cap index gaps down, then one would expect a sharpish recovery, going back into perhaps a bullish piercing kind of a formation. If the small cap index is to gap up, then regardless of what the intraday low is, the expectation would be that it will close somewhere in between the body or in the body of this candlestick, forming a bullish harami waiting for a confirmation on a later date. If it obviously gaps way up, then in that case I think it would warrant an immediate sell actually, to come back to the trend line, because there is no real reason to gap so much up. So a sharp gap down, I think because of the trend line, it should be bought into in the first wave, or at least I think that generally pattern traders, and because this is obviously a multiple bottom, they are more likely to buy it in the first fall down. Then we'll have to see how the day closes. That would be the worst case scenario. And obviously if it closes in red and then closes in red again, then in that case all these small cap holdings that we might have in our portfolio, we need to just get rid of them in the time being, because first of all it is ranging on the monthly as we identified. It's forming that inverted head and shoulders, but it's very far away from that. But the downside is very huge on the small cap if this trend line is actually broken. So it's difficult to break this trend line, but I would still give it maybe a percentage or 2% stop loss from here. So say if it's at 16,700, maybe 16,250, 16,300 would be like, I think it should not be tested. I mean if you're still confused, you can use the base of this trend line, 16,400 as an SL. That's also quite a good SL. But I find it difficult that that this can happen. But I also know that anything can happen. So obviously, if we have small cap stocks, it's time to raise the SL to a few percentage points. And in the event the market gaps down and continues to go lower the subsequent day, we have no choice but to exit it. So yes, so we have a case where the index, the broader index is Nifty 50 is creating swing highs at the moment. So I'll just zoom in. It is creating a swing high at the moment. Then we have certain sectors. Obviously, we'll just have a look at Bank Nifty. This one is also creating a swing high, and this one has created a good evening star. Like now, this one looks like an evening star. Nifty does not look so much like an evening star. So in other words, this is an evening star which is unconfirmed. So even here the plan would be same, that if the market opens lower, you'll have to buy it, because it is safer to still be in the direction of this trend rather than betting. Because here in case of Bank Nifty, unlike Nifty, we are seeing actually quite a strong kind of a move. I mean, if you have to just visualize, Bank Nifty is doing quite well actually, which is quite apparent from this. We have obviously a range there, and then this range breaks decisively. We are aware that Bank Nifty goes on to create a new high. Then obviously here we have another higher top. This is the time when I said that I missed the entry on Bank Nifty by a few points, and it's on its way currently. So this is, I mean, on one hand we have this structure, on another hand we have an unconfirmed evening star. I think we should bet that the evening star will fail rather than a higher top higher bottom pattern will fail. And obviously the failure of higher top higher bottom pattern will be the previous bottom, which is like really far away. But perhaps because of the rollover, because of the fact that we are so close to the expiry, November series traders will have to close their positions, or would have closed their positions on a horrible closing on Friday, because the margins would be too huge. So these traders who have to close their positions in November have to create December positions, and they are asked the question, should we wait for a move like this, which could take say maybe 8th, 10th December, or should we just go here and go for a move like this in December itself? This is a tough question to answer, because if you pounce in too early right here, and if it actually goes till here, it is not going to be fun to see, but you'll still see it. But if it has to do this, now this is going to become very painful, because you'll feel like an idiot who bought here at that point. And because the month is just starting, there are very few reference points. So this is a moment of a little bit of uncertainty, not in terms of where the market is headed. The market is looking quite bullish. Uncertainty because there is a need to square off the positions for November and then recreate for December. Obviously, I am aware that these problems arise. So much earlier in expiries, I try to pick up December positions, but they're not the same. They're expensive to buy, and there is a huge cost incurred in all of that. So it'll be interesting to see. Let's have a look at a few more indexes. I'll just take on Nifty Pharma. Nifty Pharma is looking reasonable here. It's looking reasonable in terms of the recent price action, and this one is looking very flag-like pattern. This is looking a very weak evening star. Nifty Pharma, I think, in the event of any green close, could become actually quite strong. But for now, it's obviously in a clear range, and this low, this 22,000 something low, looks pretty formidable in the short term. Hard to imagine the index actually breaking this, but anything is possible, of course. But prima facie, if you just zoom into the extreme price action, the extreme recent one, this obviously looks in conjunct with a double top. This looks like a reasonable range low, and now here is the question that this has definitely broken the previous range. Will it trend or not? That's the question. And obviously in the first attempt it will pull back the most, which it has. This looks like a reasonable enough pullback. Obviously if we use whenever we want to do something like this, we'll just see how much has it pulled back, and we are seeing that it's at 38% retracement in comparison to the previous swing. That's a good place to be. Any gap up will be very strongly supported here. Gap down, there is obviously room for more pullback, but the assessment or the view on this stock is unlikely to change till something like this happens, and that's really difficult and far to see as of now. Obviously it's made 5 consecutive red closes, I'm fully aware, but then in the hourly it becomes highly oversold and things like that start happening. Let's have a look at Nifty IT. Nifty IT is also interesting. It's on a range high, very, very interesting. And it looks like it's in a position to break this range. I mean, this is a huge W pattern information, and it's happened where there was a gap previously. This is looking like one of those setups which is extremely difficult to trade, but one would want to be on the long side, and as soon as they're on the long side, they will go and find a resistance here, which is less than 2.5% on the market. So with all these rounding tops, rounding bottoms, this looks like a very slow moving place to be. There will obviously be select stocks which are doing well or would have done well in November, because we are seeing the move in November has largely been up. But it's one of those indexes I would be a little skeptical going in on December, because of this resistance here, which we can see is the previous gap. So there's a 2-3% up move. But it looks like a difficult up move to have. So if someone has bought, looking at the hammer candlestick, if you remember that a few months ago we saw the hammer candle, this is the candle, this is the low that I was referring to a couple of months ago. This is how we were seeing the market. So at that point in time, we did feel that yes, okay, it's reasonable to make an attempt at a bottom pick based on this hammer low. But it has behaved pretty much like a range and it looks like it can take out the range, but we'll see. So the Nifty Pharma index is something, and obviously I think I'll just take Nifty Metals once, because this has corrected quite a bit after Tata Steel. So on the daily, this is forming a lower top, lower bottom, Nifty Metal. So this here is obviously the higher bottom first, or a double bottom at best, and this is the lower top, and the current closing is a lower bottom. It's very close. I mean, the previous low, I'm just taking the cursor, is at 10,185, and the current low is 10,121, which is a 0.6% move. 0.6% move. I'll just set up the ATR here on a security. I mean, it's 1/3 of the daily ATR. I think this is still a very low. So a gap up, or a gap down, and an immediate recovery is the only thing that keeps this bullish. If there is any further continuation, like one more decisive red closing day, something like that has happened today, I mean on Friday, this will be lower top, lower bottom on the daily, and I think it will be a no trade zone for long positions on the swing trade. I hope that by analyzing multiple charts in this video, we are a little better equipped, that for Nifty, as far as Nifty is concerned, we would obviously want to be long, but we are fully aware that the broader breadth seems to be wanting support, and that is captured in the Nifty small cap. And with that in mind, we have done some sectoral assessments also. Bank Nifty looks quite good, but there are a few other sectors which look a little bit difficult. For example, the one which is metal, they are at very critical zones, they could be under immediate pressure. So yeah, we have discussed a few candlestick patterns. I hope that all of this discussion generally increases our overall understanding of trading indicators and the terminologies that is used, and hopefully that contributes in some way to our overall development and learning. Thank you for your time. I'll see you in the next video. Take care.